Okay, a seismic shock just hit the multi-hundred-billion-dollar AI chip market. And it came from a company that, frankly, most people weren't watching for this. A legacy mobile giant has just stepped right into the ring to challenge the undisputed champion, and you better believe investors are paying very close attention. So let's break down exactly what this all means.
That's right, Qualcomm, the company known for the chips inside your smartphone, just announced it is coming for the AI data center. And look, this wasn't some minor product launch. This was a direct, full-throated challenge to the industry's most dominant player. The market's reaction? Well, it was immediate and absolutely explosive.
Qualcomm stock surged as much as 20% in a single day. That added something like $30 billion to its market cap. Investors were screaming one thing loud and clear: the AI chip war is officially on.
This is the chip market.
So what in the world did Qualcomm actually put on the table to cause such a frenzy? Let's get right into their big AI power play. The company unveiled two brand new chips: the AI200, which is launching in 2026, and the AI250 coming in 2027. Now, the key here is the architecture. Qualcomm is basically taking its proven Hexagon Neural Processing Unit, or NPU, the same tech from its mobile chips, and scaling it way up for the data center. And they're not just selling chips, they're selling complete server racks aimed squarely at AI inference, which is the process of actually running those finished AI models.
And this is not just a paper launch. Qualcomm came right out of the gate with a massive anchor customer, Saudi Arabia's HUMAIN project. They committed to deploying 200 megawatts of these new AI systems. I mean, that's over 1,000 server racks. It's a deal that gives Qualcomm immediate large-scale credibility right from day one.
But this move is so much more than just a new product line. What we're really seeing here is a fundamental, strategic pivot for the entire company.
Which, of course, brings us to the question that every single investor is asking. After a pretty famous failed attempt to get into the server market years ago, why is Qualcomm risking it all on the data center again, and why do it now?
Well, the answer is a classic push and pull story. On one side, you've got the push from their legacy market. Let's be honest, smartphone growth has pretty much gone flat. But on the other side, you have the incredible pull from a new market that is just absolutely exploding. The AI data center is the new battleground, and for Qualcomm, the risk of not being in the game was becoming way greater than the risk of jumping in. And the size of the price here is just staggering. The total addressable market, the TAM, for AI accelerators is projected to be worth more than $300 billion by 2030. If Qualcomm can capture even a small slice of that pie, it would completely transform their entire business.
But here's the really interesting part. Qualcomm isn't trying to beat Nvidia at its own game of just raw brute force performance. No, instead, they're using a completely different playbook, one that's built from the ground up on efficiency.
This slide really illustrates that strategic difference perfectly. Just focus on the memory row. The AI200 has nearly 10 times more onboard memory than Nvidia's flagship H100. See, their goal isn't just raw speed. It's about fitting these massive AI models onto a single card, which reduces complexity and latency. It's a clear bet on memory capacity and, crucially, a lower total cost of ownership.
And that concept, TCO, is so important here. We're not just talking about the sticker price of the chip, we're talking about the total cost to run it over its entire lifetime, especially power and cooling. When you're filling data centers with tens of thousands of these things, electricity becomes a massive expense. Qualcomm is betting that for large-scale AI inference, customers are really going to start prioritizing cost per query and queries per watt.
But look, making a compelling technical argument is one thing. Actually winning in this market, that's a whole different ballgame. And this really does set the stage for a true clash of the titans.
The scale of the challenge is laid bare right here. Nvidia doesn't just lead the AI accelerator market, it pretty much is the market, with a staggering 90% share. This isn't a hill that Qualcomm has to climb, it is a mountain.
And Nvidia's biggest defense isn't just its amazing hardware, it's the CUDA software platform. It is this powerful, sticky ecosystem that developers have spent more than a decade building on top of. This CUDA moat, as it's called, creates enormous switching costs. It makes it incredibly difficult and painful for customers to leave, even if a competitor comes along with slightly better hardware.
So, for investors, the risks are clear, and they are significant. First up, execution. Can Qualcomm actually deliver these chips on time and meet its own performance promises?
Second, the ecosystem. Can they really convince developers to adopt a whole new platform and chip away at that CUDA moat? And third, competition. You can bet that Nvidia and AMD are not just going to sit back and watch this happen.
So with all of that in mind, let's distill this down into an actionable checklist for any investor who's watching this space.
Over the next year to year and a half, these 4 things are going to tell the whole story. First, look for new customer wins. Securing a major cloud provider, an AWS or a Google, that would be an absolute game changer. Second, watch for the independent benchmarks. The MLPerf results will be the real proof of whether their efficiency claims actually hold up. Third, you've got to track their execution. Are they hitting their 2026 deployment timeline? Any delays will be a huge red flag. And finally, keep a close eye on the competitive response from Nvidia and AMD.
And this right here is the bottom line for investors. Even after that huge stock surge, Qualcomm still trades at a forward PE multiple of around 18. Now that's a huge discount to AMD, and it's less than half of Nvidia's premium valuation. What this chart is telling you is that the market is still skeptical, but it also signals massive potential for the stock to re-rate if Qualcomm's big AI strategy even begins to pay off. Which leaves us with the final multi-billion-dollar question. Is this a brilliant pivot that's going to redefine Qualcomm for the next decade? Or is it just a costly distraction? Well, the next 18 months are going to give us the answer. Thanks for watching The Chip Market, your edge in semiconductor investing. Let us know your take on Qualcomm's big bet in the comments. And as always, don't forget to like, share, comment, and subscribe.